Dubai in 2026 is not the same as Dubai in 2025. And that is more true now than ever. I keep seeing the same outdated arguments being used. Too risky, pure speculation, nobody wants to live there anymore. But if you look closer, you see that the market has evolved significantly. The city still has a long-term vision and growth strategy. However, the market itself has changed. Anyone looking to invest in Dubai now needs to understand that entirely different rules now apply. And this matters even more than it did last year. If you approach Dubai today with a 2025 mindset, you will make the wrong decisions, whether you buy or decide not to buy. That's why I'm going to show you exactly what the new rules are in Dubai, what has remained unchanged despite everything, and what this means for you as a real estate investor. Welcome, my name is Eugen Zimbelmann from Dubai Finance. I help investors successfully invest in real estate in Dubai by finding the right property as an investor, Dubai Land Department certified property valuer and mortgage specialist. And let me get straight into it. Yes, the geopolitical situations and the war involving Iran do play a role, but they are only one factor among many, and honestly not even the most important one. The far more important question is this: what is happening structurally within Dubai itself right now? Which forces are actually shaping the market? And who is benefiting from all of this at your expenses? Because what still surprises me again and again is this: even 2026, off-plan properties are being sold just as strongly as they were 2 years ago. Off-plan means when you buy the property, it is still in the planning or construction phase. So you are buying something that does not physically exist yet. And I see agents every day pushing this type of investment, even though it is very unfavorable for investors from economic point of view, with promised returns that have nothing to do with reality, and with locations that are far from generating real demand. Just like last week, an investor was sitting in my office in Dubai. He had invested almost $6 million in Dubai real estate market, exclusively in off-plan. He was promised returns of 20-30% or more. The reality? Since his purchase was about 2 years ago, the value of this property hasn't increased at all. In fact, he's even losing money because the 4% transaction fee alone is something no buyer is willing to absorb. And do you know what the worst part is? He is not an isolated case. And that is not just an isolated opinion. As an accredited real estate valuer and expert and founder of the only German real estate valuation company, I regularly meet industry colleagues within the Dubai Chambers Committee. And even there, the emerging oversupply in many areas of Dubai is clearly recognized. At this point, the off-plan segment accounts for almost 73% of all residential real estate transactions in Dubai, and the trend is still rising. At the same time, companies such Cavendish Maxwell, a major real estate valuation company in Dubai that is also represented within the Dubai Chambers Committee, have explicitly warned that this growing concentration on off-plan properties is creating structural weakness in the market. And this is exactly what we are seeing here right now. Why are off-plan properties still being sold so aggressively? The answer is simple. Brokers earn significantly higher commissions on off-plan deals, typically between 5 and 10% of the purchase price, paid directly by the developer. On existing properties, the commission is usually only around 2%, just a fraction of that. This creates a major conflict of interest. In many cases, the broker earns the most when you buy what is the most profitable for them, not necessarily what is most sensible for you as an investor. And even mortgage has suddenly become much more interesting for many of these foreigner buyers. In the past, the narrative was that mortgage was either not possible for foreigners or even dangerous because for some certain bank rules. But the opposite is true. A mortgage in Dubai is accessible for foreigners and it is secure. We provided this as a German-owned mortgage company since 3 years. A mortgage in Dubai can leverage your investment over 25 years, avoid currency risk, and diversify your portfolio. Today, based on that clear positioning, we have become the largest German-owned real estate mortgage company in Dubai. And not only that, we are now also a strategic partner. But more on that in just a moment. For more than 2 years now, I have also been talking about the disadvantages of outlying locations and why you need to be very careful there. Why it is absolutely critical to analyze how many new properties will be built in a given area in the future and what impact this oversupply will have on your investment. And even today, properties in these areas are still being sold, highly risky and often harmful to investors. Locations like Dubai Islands, Ajaan and even JVC are still being marketed as investment opportunities, despite the fact that a significant oversupply is emerging there. In these areas, the supply of new housing will multiply dramatically. Warren Buffett once said, risk comes from not knowing what you are doing, and there is hardly a more exact way to describe the current problem in the Dubai market. Now we come to the core of what has really changed in 2026. In cautions, fear-driven phases like now, off-plan properties become almost illiquid. In other words, you cannot exit easily anymore, not without significant discount. Anyone trying to sell an off-plan unit on the secondary market today often has to accept discounts of 10 to 20% below the original purchase price and still struggles to find buyers. And this does not only affect poor locations or weaker developers, it also affects established developers like Imar or Shoba, or even in areas that are generally considered solid. Why do people still sell below the purchase price then? Because they have no choice. Anyone who can't meet their payment plans to the developer risks having their contract cancelled. In the worst case, it can even lead to a total loss. These are not theories. These are situations that people are currently coming to me with. And now comes something I need to tell you, even it is uncomfortable. Right now, on social media and YouTube, there are so-called real estate experts claiming that their apartment in Assisi Riviera has dropped by 30% because of the war involving Iran. But the truth is, these apartments had already lost significant value long before the war. On top of that, there was a construction period of around 7 years. And back at handover, roughly 2 years ago, there were already numerous owners selling at massive discounts, claiming that the drop in value of this property is due to the war is defensive narrative. It is the easier way to shift responsibility onto external factors, the broker, geopolitics, or the broader market. And then to spread supposedly truthful stories through sensational YouTube videos in order to generate reach. But what matters far more is telling the truth, even when it goes against an existing market narrative, and evaluating situations analytically, objectively, and neutrally. That is exactly what I do, and it is also why I have been criticized for years for my statements about the Dubai real estate market. Whether it's from frustrated off-plan buyers who refuse to accept reality, from investors in areas like JVC who dismiss a factual analysis, or from off-plan purchasers still waiting for their expected gains while avoiding an honest assessment of the situation. But this is not how a professional investor thinks. Responsibility starts with yourself. And if you want to receive this kind of analysis regularly, independent, direct, and without being sold any illusions, then feel free to subscribe to my YouTube channel, Dubai Finance. I publish 3 episodes every week that help you truly understand the market, not as marketing, but as a basis for making better decisions. And now to the critical questions. Are there still opportunities in Dubai at all? Yes. And I'm not saying this to motivate you. The numbers speak for themselves. In 2025, Dubai recorded over 200,000 residential real estate transactions, with a total transaction volume of more than 680 billion dirhams, an all-time record level. Population growth is continuing from over 4 million residents today towards an estimated 5.8 million by 2040. According to current market data, rental yields averaged around 7%, significantly higher than comparable global cities such as London at 3% or New York at 3.5%. Will McIntosh from Knight & Frank describes it as follows. Dubai is evolving from a speculative real estate market into a market driven by genuine end-user demand, structural depth, and long-term investor confidence. And that is exactly the point. Existing properties in prime locations, with real rental demand, with cash flow from day one, and with genuine yields, that is what works today. That is what I have been communicating through my social media for almost 3 years now. And that is the difference between someone who simply buys any property in Dubai and someone who makes the right investment decision. And here's what most investors currently do not understand. Fear phases are not the end. They are the beginning of the next opportunities. While many hesitate, the right investors are positioning themselves. But, and this is critical, only those who are capable of acting can actually benefit from these phases. Those who are not prepared, who do not have a clear strategy, who do not know how they can get their mortgage, they watch while others buy. And this is not a short-term trend. This is an investment principle that applies in every market phase. Only now it matters even more. That is exactly why I do this work. Not to sell real estate, but to position investors correctly. As an independent valuer and investment specialist, I analyze market data every day. I know which locations work and which do not. I know how to mortgage in Dubai real estate, even for foreigner investors. And I work exclusively in the interest of my clients, not in the interest of any developer. The clients who come to us do not rely on hype, not on nice visuals, not on promises. They rely on facts, honestly, and reality. Because in the end, that is all that matters. Not nice words, but strong returns and a long-term secure investment. And if you now understand that the market has changed and that with the right information and the right strategy, you can benefit from these phases either now or in the future, then go now to www.dubai-finance.com and book a free initial consultation. We will develop a strategy together, long-term, secure, based on reality, here and now.